session. I would like to call upon stage Shivakumar Bavamala, Faculty Finance and Financial Technologies, Hero Wired, who will be moderating this session. Also joining him is Rajaram Kannan, the CTO and co-founder, Bondi Value, and Peter Choi, APAC General Manager, Floating Point Group. Please welcome them with an applause. So we can, please take, we can start.
Hello, am I audible?
Yes. Could you be a little louder?
Am I audible?
Yes.
Yeah, I am. All right. Thank you. Thank you so much. Thank you for the opportunity. Let's maybe start with a quick round of introductions. Could start with Peter.
Hello,
Raj,
testing,
and then myself.
There we go. Hey, everyone. Thanks so much for joining us, and thanks so much for having us as well. My name is Peter Choi, and I'm currently the head of APAC for Floating Point Group. Real quick introduction for Floating Point Group. For some context here, we are a crypto-native company, and what we do is provide agency OTC execution. So that's trading services for institutional customers and institutional investors, like hedge funds, VC funds, family offices, people of that nature. We also provide custody for those assets as well. And again, we're really, really thrilled to be here. And looking forward to the conversation.
Can you guys hear me? Okay, I can hear myself. I'm Rajaram, Raj. I'm the co-founder and CTO at Bondi Value. Quick introduction on Bondi Value. So we are a bond-focused FinTech headquartered in Singapore with presence across the globe, including in India. We have launched the world's first fractional bond trading exchange, regulated by the MAS in Singapore, and very happy to be here and talk a little bit more about democratizing online trading.
Thank you, Peter. Thank you, Raj. And I'm Shiva. I'm going to be your moderator. A couple of lines about myself. I'm actually a bit surprised to find myself in a FinTech conference because I come from a fairly traditional trading background. I spent about 15 years trading corporate bonds, credit derivatives, FX, and the old forgotten half of the financial world. But anyway, it's good fun to be here. In terms of what I do, I currently teach finance. I teach about financial markets at an edtech called Hero Wired, which is a company set up by the Hero Group. We teach FinTech too, and what I bring to that course is perspectives on, more in terms of the lessons from traditional markets. So with introductions out of the way, let's perhaps dive into the topic for the day. And what I thought, Peter and Raj, what I thought we could start off with is that with trading getting democratized, and with you and me, and by you and me I mean retail investors having greater and greater access to different asset classes which you did not have in the past. Corporate bonds, for example, the emerging assets in the crypto space, for example, and more on the traditional side, investment avenues such as private equity, for example. All of these are becoming more and more accessible to you and me as individual investors. Now, given this, there are clearly challenges to this, and that's what we are here to talk about as well. Now, to my mind, one of the challenges that traditional one of the challenges that individual investors have is when it comes to either putting together an investment thesis for yourself before you go after these assets, or at least being able to grasp an investment thesis proposed by someone else. Now, the thing with equity markets is that it's a market that's been around, it's matured, and the thesis is sort of reasonably well understood even by retail investors. But when it comes to assets such as corporate bonds, for example, or cryptocurrencies. How does my question is to you both is how does an individual retail investor wrap his head around the thesis to go after some of these assets? And if I could maybe start with you, Raj, on how you think that happens when investing in a bond.
Sure. So I think this is sort of a question that comes to us a lot of the time. So what we have done at Bondi Value is we have created the ability for individual investors to be able to invest in the bond markets, buy bonds just like equities, right? So far, the bond markets are largely institutional in nature. They are largely over-the-counter driven, highly fragmented, and for individual investors, the access has been difficult, right? So the way we look at it is this, and we've seen this happen in the equity markets over the last couple of decades, Forex over the last decade, right? And we feel it's a time for bonds. If you look at equity markets, right, even though it's better understood now, you have the underlying infrastructure. You have exchanges. You have the entire market infrastructure, which is super transparent, super efficient. It gets more and more efficient, as we go by. On top of that, you have points of access, all the members, the brokers, banks, modern fintechs, etc., Zerodha, Upstocks, right, that have really grown access. And then for end clients, retail investors who want to invest in, it's still a challenge to find out what are the right picks, right? And if you look at what's happened in India, which I'm super proud of, is something like a small case, right, where you're actually getting, the same kind of advice that a private banking client will get. Create portfolios, actively manage them at a really low cost. And I think the same thing is something that I see needs to happen in the bond markets, but it has to start with something along the lines of what we are doing, creating the infrastructure so you can actually buy bonds that today have large minimum sizes at much smaller sizes. So you can actually create a composable portfolio on top of that, be able to trade them, have liquidity, have a marketplace, just like an exchange, not over the counter, and have direct access to it via your banks, brokers, fintechs that you're already familiar with. And then on top of that, have the kind of small cases of the bond markets as well, right? Where you have professional advisors actively helping you manage portfolio at an individual level at really low cost, right? Versus trying to get people to try and understand the complexities of the bond markets itself.
Yeah, happy to share a bit on this from the crypto perspective. Crypto is an interesting asset class. I think everyone understands the volatility behind these, prices that you see every single day. You hear about the thousands of different, cryptocurrency assets that exist. You have hundreds of different exchanges where you can purchase these assets. And so, as a retail consumer or a retail investor, you're sitting there like so overwhelmed with information, right? Like, where do you begin? Where do you start? How do you start? I think in crypto, though, there are a few fundamental tenets that people should remember, right? One of them is really understanding what segment of crypto you want to invest in, whether that be just, purchasing and selling Bitcoin here and there, whether that be more interesting and sophisticated stuff like doing DeFi and doing things like staking and, interest-bearing products. So there's a lot of complexity across the crypto ecosystem, right? But when you come and first start in crypto, you have to have a few things. One of them is an account, and the idea of like how to choose your account really depends on your objectives and also the ease when it comes to flow of funds, right? How do you deposit money into your account? Is my local fiat currency supported on this platform? Is it not? And if not, how do I get around that to then fund my account, right? So there are a lot of kind of technical confusions to get set up. But I think one of the most interesting things to remember is the adoption rate of cryptocurrency and investors in it is absolutely insane right now, right? The world population is just under 7 billion people. Over 6 billion have smartphones. Statistica just came out last month and reported that over 80% of the world's population currently owns a smartphone. Every single person that has a smartphone could technically become a retail investor in cryptocurrencies. And I think that's the real beauty of it, right? You don't need to be a Wall Street banker. You don't need to do technical analysis at the start. If you just want access to markets, you can accomplish that. And I think that's a really unique thing about crypto that goes underappreciated sometimes. I think, if it were me, and this is not investment advice, this is not a reflection of Floating Point Group, typically what I tell people to do is do a very simple thing called dollar cost averaging, right? Look at an asset that you want to purchase and just buy a little bit of it every single day. Some people don't even necessarily realize that, you can buy fractional shares of crypto, right? You don't need to spend $20,000 USD to purchase a Bitcoin. You can if you want to, congratulations, but you don't have to do that, right? So the opportunity really is there for all. I think the barrier to entry is more around the education point, right? People don't necessarily know what they're getting into, and there's always this kind of like mystique around crypto. But that's natural in any new asset class, right? You look back at banking, and when banks started using computers to maintain ledgers, I wasn't even born, but I know that there were lawsuits around this, right? Like people were freaking out because law firms were using email, and the American Bar Association was starting to clamp down on law firms because they were using newer technologies. There are a lot of risks that come with these asset classes, I think, and some of the risks are implied. But so long as you kind of have somewhat of a thesis, whether it be dollar cost averaging, whether it be consolidating a position over time, whether it be swing trading, you can start to educate yourself a little bit more about how to invest in crypto, and it's really not too difficult to start. I think one last comment I'll say on this is, when Bitcoin is skyrocketing and going to the moon, as they say, when you ask people who haven't invested in crypto yet, well, how come you're not in? And don't you want to get in? They typically say, oh, it's too expensive. It's not the right time. And then you look at times like today, and you ask people, okay, now that crypto prices are down, are you going to invest? And they're like, no, probably not. I'm scared of this, right? So at a certain point, there needs to come a point of inflection where people just kind of need to educate themselves and start self-serving. And I think dollar cost averaging is one of the most basic strategies to kind of have in the beginning.
Moving on to another challenge. Yeah. Hello. Yeah. Sorry. Moving on to another challenge that, as a retail investor, one faces in investing in these assets is just market liquidity and democratization. Whilst sounds exciting and promising, the real question is, are we moving towards a stage where there's sufficient liquidity in these assets? And market liquidity isn't merely just the ability to buy or sell when you want to. I think it goes beyond that, and investment managers are increasingly recognizing that, and this is happening across asset classes, increasingly realizing that market liquidity is actually an asset driver and can be a significant asset driver. There can be significant erosion of value because there's no market liquidity. So your fundamentals of the company, of the issuer, of the bond, for example, can be sound, but you could easily end up dropping 5-10% because there's no market liquidity. So with that, how does democratization and how do the platforms that you're building, how do you address that challenge?
Okay. So, this is, again, a very critical part of creating this democratizing online trading is, especially as a young marketplace, as an exchange, right? Having liquidity and the right kind of liquidity. So when we look at the bond markets, the first thing is bonds. The same bonds are traded across multiple venues today, multiple over-the-counter venues. So there's already fragmentation, right? And price discovery is always a challenge when there's fragmentation, in addition to liquidity. So what we do today at the Bond Blocks Exchange, we have designated market makers on the exchange who are both incentivized for both having prices, providing sufficient liquidity, but also having guidance on the prices being consistent with prices across other marketplaces. So having the right incentives, having the right partnerships with market makers to kickstart the liquidity availability on a young exchange like ours is critical. So just as an example, today I just looked at the data, right? And we are within 25 basis points of both the prices and the spreads on the Bond Blocks Exchange versus the other marketplaces. So that's something that's very important in ensuring liquidity, ensuring the right kind of liquidity so that people are able to get fairness and transparency from the venue. The second thing that I'd like to add is that as an exchange, so when you look at, again, I go back to equity because equity exchanges have been there for a while and they're super efficient and transparent. So what happens eventually is because there are so many people, it's all to all, right? And the price discovery and the price itself becomes tighter just because even individual investors can place prices, right? And I think that's something that I see will eventually happen in all of the whatever asset classes where you can run an exchange, which will actually bring even better liquidity, even better, tighter pricing as well.
Sorry, it's a little hot up here. I'm sweating quite a bit. Talking about liquidity, though, in crypto, that's one of the key issues that we currently deal with from the institutional side, right? The problem is if you're a massive institution and you have a large position of crypto or you have a large, amount of cash, if you execute a trade on one exchange just in a single shot, you're going to destroy the market, right? And that's not an environment that institutions can get behind. That's not an industry that even retail folks like you and I can really rely on and trust as an investment, as an asset class, right? So I think the fragmentation of liquidity is a key component of the crypto markets, right? And talking about how our firms kind of deal with this, that's kind of the thing that Floating Point Group saw at the start of it, where initially there's a lot of arbitrage opportunity because there is such fragmented liquidity and fragmented depth of order books across the space. Now it's consolidated a little bit to this point, but the problem is not with Bitcoin and Ethereum, right? When you trade Bitcoin, when you trade Ethereum, there's a lot of volume there. There's millions and billions of people around the world who are trading this every single day. So there's no problems there doing big orders and getting in and out of large positions. The problem is illiquid assets, right? There are thousands of crypto tokens out there. There are massively, funded. There are, venture capital funds that have given them millions of dollars to go develop their asset. And people trade this every single day. Now, if you're an institution and you have, $500 million of a position of some random crypto asset, and the price goes up, and eventually you want to cash in on your, returns, how do you sell that asset without, incurring so much slippage that effectively your investment gets wiped out, right? And so you have to build a couple of systems. You have to aggregate liquidity. You have to build smart order routing. You have to build algorithmic trading. There's a lot of different things that you can do to generate this liquidity that doesn't exist, right? And that's a difficult thing. And it's a difficult thing to do because if you're just a retail trader, you don't necessarily know where the best venue is to be transacting, right? You could be getting robbed of commission fees. You could be there's just a lot of issues in terms of kind of the liquidity that exists on these different exchanges. I think being mindful of your objectives, I think, being mindful of the timing, and then from kind of an industry perspective, being mindful for us on how to aggregate this liquidity, whether it be through M&A structured deals, whether it be through other forms of consolidation, it's a key component. Quite frankly speaking, liquidity is only going to improve in crypto. I think that's what I believe at least. And the question is, where will in what direction does it go? If you are going to, introduce a lot more volume and a lot more liquidity on one exchange, is that kind of going to be the future of crypto? Is that going to be that centralized, kind of exchange where people go and transact? And then the question then becomes, well, doesn't that go against the thesis of crypto being decentralized in nature, right? So it's a lot of kind of floating questions out there. No pun intended. And I think liquidity and the lack of it is a really, really key problem that we have to realize as retail investors as well. And it's only going to be more and more important in the future. And yeah, I think that's kind of what Floating Point Group does as well, right? Where effectively what we do is really help institutions that are invested in these large ecosystems that are illiquid to be able to get in and out of large positions without harming the market, right? Because overall, you do want to be a supporter of different cryptocurrency markets that you're investing in, especially the institutional people, because they are going to have longer term engagements with them. So that's kind of the idea of making sure that you are being, I guess, responsible in the market. You're not incurring slippage. You are looking for liquidity. And then over time, I think there is going to be more liquidity that flows into crypto markets.
So we've heard from Raj and Peter about two things so far: investment theses and how to bring it together, or how to make sense of investment theses in some of these assets, or how to actually make investment theses less important by, diversifying and taking smaller risks. And we've heard about market liquidity. A very quick follow-up question, and this is probably the more exciting bit, which is, could you humor us with some illustrations of the kind of returns that are there for retail investors to be had in some of these markets which are now opening up thanks to the work that you're doing?
What was the question again? What was the question again? I'm sorry.
The question is some illustrative examples of the kind of returns that we could that open up to that are more accessible now to retail investors with democratizing and the opening up of some of these markets.
Yeah, I think crypto is really uniquely positioned for just that, right? The concept of being a 24/7, 365 market where there is no open, there is no close, it is really kind of lowering the barrier of entry to a lot of people who are investors for the first time, right? I think for the longest time as well, one problem with crypto has been there's always been a coupling or a relationship between the concept of gamification and cryptocurrency, right? Using phrases like to the moon or hodl or whatever else you want to insert here, that's really contributed to this whole idea of you're going to the lottery, you're going to the casino, you're ultimately gambling your money away. And I think kind of shifting the conversation away from that is really, really important. I don't know how to do that. I think it just takes time, of course. I think it takes market cycles as well. I think it's going to, this isn't the last crypto winter we're in. I promise you there's going to be more in the future, but that's okay, right? And I think what crypto also does is it provides an opportunity for education, right? I'm 25 years old. The first thing that I ever bought in terms of investments was Bitcoin. That's probably like unheard of, right? Like people generally buy equities or bonds or stocks and things like that. But for me, my vehicle to education for fintech and finance and markets, capital markets, whatever, was cryptocurrency. And so I think that in terms of it being an education vehicle, I think it's really, really uniquely positioned as well. I mean, and you also, at the end of the day, the idea is financial sovereignty, right? Like financial independence. And that goes back to the principles of cryptocurrency and blockchain technology, which is distributed ownership, right? Which is individualized ownership of kind of whatever it is, whether it be a cryptocurrency, whether it be a piece of art like an NFT or whatever else. I think that's a really cool thing. Ultimately, I'm not going to sit up here and like say that the governments are unstable, you gotta, save your money and all that stuff. That's a little bit crazy. But I think the idea of having ownership of your wealth, I think the idea of not having to rely on an intermediary like a bank and not being able to send wires on weekends because banks are closed and having to deal with really predatory fees left and right, that's ridiculous. I think the future of finance is really, really interesting, and cryptocurrency is a key component in powering that. So.
Yeah, I think just again using some numbers, right? So when what our data tells us is that when people with in Asia with wealth levels of above $5 million of assets under management invest about a third to 40% of their wealth in directly in the bond markets, right? And then if you're below $1 million, right, it's negligible. Right, so I'm using that as a pointer to say that, yeah, the ability for people to be able to invest like the rich, that's where the rich get richer, right? So they have access to better investment opportunities. And if you look at the bond markets and you look at today, so the HSBC 6.375 per perpetual bond on our exchange today is running a yield of about 7.5%. It's a US dollar bond. Right, and so getting 7.5% on US dollar,
so
on a fairly stable bond.
So that is a US dollar denominated bond issued by HSBC, admittedly a perpetual, but you're saying that the yield is about
it's about 7.5%, something like that today, right? And it's just a spectacular opportunity to actually invest and grow your money just like the rich do.
Fascinating. Thank you for that. What I want to do with the time that we have is to quickly touch upon one last thing before we open the floor for questions from the audience, is more on the thoughts you have around the technology that's enabling these changes to happen. So quick, 1 to 2 minute roundup on that, and then we'll open the floor to questions. Should we start with Peter?
Yeah, sure. So earlier I talked about the smartphone adoption rates, right? Like I talked about kind of crypto adoption rates more broadly. I think if you look at data, there is clear correlation between the stability of governments or lack thereof and then the rate of crypto adoption, right? And I don't think that's a mistake. What I'm saying is the more unstable a government is, the probability of a higher adoption rate for cryptocurrency and digital assets. And I think that relationship is a really fascinating to understand. Talking about technology and like how it empowers us, look, there are incredible amounts of vehicles to invest in crypto nowadays, right? Even 4 years ago, there was hardly anything. No one, kind of really supported this. But now you look at, classic, crypto exchanges like the Binances, the Coinbases of the world and all that stuff. But if you even look at like payment platforms like Venmo and PayPal, these places also offer to buy and sell crypto for you. So it's like the marketplace and the technologies that kind of enable access to these markets are so widespread at this point. And so we're already there. I think it's at a really, really good place. Now moving forward, what's the question? And this is where I think it gets really, really exciting. For the longest time, crypto has been pretty slow. It's been expensive. It's been really fragmented. And I think over the next 2 years, this is where it changes because of technological developments behind it. Thinking about the topic of like interoperability, right? The idea of kind of being able to mix technologies and use a hybrid solution to get extract the most value out of each underlying technology. That is happening in crypto every single day. You hear about some technical terms sometime about layer 1 token, layer 2 token, metaverse, web 3.0, all this stuff. The simplest way to put it is that those first cryptocurrencies that existed, the blockchains that kind of power that cryptocurrency, those networks are now interacting with each other, right? So where Ethereum made up for some of Bitcoin's incompetencies, other currencies are now making up for the expensive cost of maintaining Ethereum networks, right? So there's a lot of kind of technological developments that really do impact the growth and impact the rate of adoption overall for crypto. I think taking it to Floating Point Group and kind of how we leverage that is, it's quite interesting. So I mentioned earlier that there are hundreds of places where you can transact on crypto, but one interesting thing is smart order routing, right? Like making sure that your overall big trade gets moved to the proper places and the proper venues, capturing good opportunities for pricing, capturing arbitrage opportunities as well, capturing spikes in volume and spikes in volatility as well. So kind of building technologies that are forward-thinking and proactive and kind of read markets and then execute for best pricing. That's something that we've developed in-house, and we're pretty. That's pretty cool. I think moving forward, the question isn't. Right, so I think the conversation has shifted fundamentally where 5 years ago, 4 years ago, you're in a corporate room in a meeting and the question is brought like, what should we add to our corporate balance sheet? If someone were to sit there and say, let's add Bitcoin, people would look at them like they were wild, right? Today, if you don't propose putting Bitcoin onto your balance sheet, that is a little bit, that's kind of unconventional now, right? My point is everyone is considering this, and I think the number of adoption from the traditional world of, the big incumbent technology providers and big financial providers, the more institutional investment that comes in, the more acceleration there's going to be in terms of technological growth, and that's really exciting to see. We're still very early. I feel like every time someone asks, what stage of crypto development is the industry in at this point, people keep saying we're very early. But the reason behind that isn't that we were slow, it's just that the possibilities are endless, and so there's a massive pool to accomplish. The question is, when do you say that we're in the middle if there's an ever-expanding list of things to build, right? So, yeah, just a note on technology.
Yeah, I think I'll try and summarize our end of how we employ technology in two different things, right? So the first thing is fundamentally for the bond market so far, the returns on what we just spoke about, right? That bond, the minimum denomination for trading is $200,000, right? Just not available to everybody. So the part of what we do is to take the bond, use traditional procedures of a depository receipt, which the traditional financial world is familiar with. So take that bond. We have a distributed ledger system based on Hyperledger Sawtooth that we run with our custodians, Northern Trust and Citi. Right, so global custodians, traditional, largest, and we create depository receipts in the DLT. And now the main difference is these depository receipts are tradable at $1,000 rather than $200,000, right? Making it much more accessible. And we can bring that down to any degree. But what we are seeing today is people like to buy in about $4,000 or $5,000 clips, but we can bring that down. On top of that, we are completely cloud-based, cloud-native, serverless, right? And we run a fairly sophisticated exchange with a central limit order book, which the members of the exchange can connect to and basically run a highly scalable all-to-all matching. So, and then they are integrated in such a way that today's settlement is instantaneous. So it's atomic and instantaneous. So you can buy, and then the next second you can actually go and sell if you think the markets are going against you.
Thanks for that. I see we have about 7 to 8 minutes. Are there any questions that we can take from the audience on any of the? Go for it.
Oh, he's going.
Hi. So question for you, Peter. Cryptocurrency has the word currency in it, right? So far, we're comparing it to equities and bonds. The value of a currency is in the ability to make transactions for real-world assets, right? So essentially, use crypto to buy bonds, use crypto to buy mutual funds. Not really in the fact that crypto itself is an investment, right? You don't want a currency that goes up 100% one day, comes down 200% the other day. You know, you're paying twice for your groceries the next day than you were the day earlier, right? Yeah. So when do you see that happening?
Yeah. It's a really, really good question. And this is something that people, honestly speaking, haven't fully figured out yet. This is why the conversation of central bank digital currencies versus a stable coin versus crypto assets, like that's why things are so conflated so regularly, is because there's not a one-way solution yet. But you look at a couple of case examples, and I think one interesting one is the country of El Salvador, right? Where they made Bitcoin a legal tender in their country, and now they're like mining Bitcoin through volcanic power, and like it's some crazy stuff, and it's really, really cool to watch, right? And I think kind of understanding their case example will be interesting to see. Now, your question of like, how do you effectively use this currency in terms of like getting goods and services in everyday life and things like that? I think there's a couple of things that happen. One, it's one side of it is on the consumer, and the other side of it is on the retailer, right? So like if retailers are offering this to support, receiving payments for whatever they provide in crypto, but no one has crypto, then it's kind of, it's pointless, right? And if everyone has crypto, but no retailer accepts it, then where do you use it? So I understand that entirely, but you look at a couple of examples, at least, in places like America, or even places like, China, not China, that's illegal, like Singapore, South Korea, places like this, where there are major retailers like Chipotle or like McDonald's even, that are rolling out accepting forms of payment in crypto, right? So I think that's a really strong signal. And I think, last comment on this is, to me, I don't think Bitcoin is the best, form of digital asset or cryptocurrency, whatever you want to call it, for payments. Because you're right, it's an incredibly volatile thing. I think stable coins, or I think CBDCs and things like this might be significantly more of a more malleable kind of, currency to use for these things, right? I don't have the answer to which one is the best, but I think, whether it be Bitcoin, whether it be a stable coin, or whatever it is, the really cool thing is that they're all being supported by blockchain technology, right? And that is something that is immutable. That is something that, it really kind of brings out the strength of these payment systems and all that stuff. So that's a great question, and I'm really interested to see myself where it goes into the next, 3-4 years.
Hi, Peter and Raj. Thank you for your session, such an insight. Peter, my question is a very basic one. So, being from a non-technical background, right, there's a much chaos to understand, right? So, the first time I opened Binance, I was shocked, and the first time I opened Coinbase, I was shocked that what the hell is going on over here. So, for the people who are not from the IT background, right, I understand that I need to understand how the technology works. I do not need to understand how the coding works. I get that, but what are the basic things, or what are the basic go-to things that I need to understand? Like, it's very typical for me to understand the business perspective or the use cases unless and until I do not understand the technology. But to understand the technology, it's much complicated. Is there any simplified version of things, or is there anything that you recommend, or for a retail investor or for any business to go about it?
For sure, for sure. And I really appreciate that question as well. I don't come from a technical background. Like before finance, I was in politics. And so like I am not smart, right? Like when I read stuff on the internet about crazy technologies and like all this stuff, I don't understand it the first time, even today, right? Like I have to read it 3-4 times. So I understand the confusion entirely. And when you open up your, apps to buy crypto, there are lots of colors, there are hundreds of different things you can touch, and it gets very confusing. So I think one of the quickest ways to educate yourself is just through sheer exposure to information, right? Whether or not you understand it, that's irrespective of the goal here. It's literally just getting yourself comfortable associating yourself with certain words, right? And then over time, you get more comfortable with kind of the environments and the conversations and the dialogues that happen, and it naturally and organically kind of happens. I think one other thing to think about when learning crypto is understanding that it's not just kind of like a stock or like, or whatever, an investable product. People kind of do look at it like a commodity, right? Like digital gold, as it's very often referred to in terms of Bitcoin. So understanding kind of like why Bitcoin exists in the first place, like what is a problem that Bitcoin and all these cryptocurrencies are solving? I think a lot of us to this day have forgotten about the initial messaging, right? So really understanding the fundamentals behind the birth and inception of digital assets, and then understanding kind of like what's next after that, right? Like people often talk about, okay, now I buy Bitcoin, now I have Ethereum, what do I do with this? And there are a lot of really, really cool things you can do, but it's hard to understand all that until you have the context and the pretext of this stuff, right? So yeah, I think 2 things again to summarize. One is straight up exposure to that information and just staying with it. It really does come over time. You do not need to be a technical person to really appreciate the beauty behind it. And then secondly, understanding the broader use cases of crypto and kind of the inception of why it was even created in the first place. Like what were the problems it was solving? But yeah. Great question.
I'll add 2 cents to that because this is a question that we grapple with in class. How do you build your investment thesis around a digital asset, right? There is, of course, the technical side of it, which, you get it or you don't get it. It's, there's not much you can do if you don't come from a technical background. But I'll just give you one example of how the economics of it does matter. And in the context of stable coins, we all know that Terra Luna went down a couple of months ago. And in that context, in the context of stable coins, the question then is, if you look at the other existing ones, you take Tether, you take the other stable coins out there, the question is what is backing these up? Now, what you don't need is a technical background to just download the auditor's report and see what is backing Tether's, whatever, 72 billion or 80 billion dollars worth of tokens that they have. And you'll find that there is a breakdown that is there. And then what you do with that information is then, that's up to you. But that is one example that I wanted to share with you where the non-technical bits are important as well when building your investment theses. And a lot of times it's not rocket science. You just have to look for it. As Peter said, it's about exposure. It's just about going after and looking for that information that you're looking for. I think we might have time. We're out of time, right? Yeah.
So with that, I would like to thank all our panelists for taking time out and joining us today. Thank you.